Hello traders, it's Wednesday, April the 13th, and this is our WMoption's New York session market report. The Chinese economy continued to surprise early this morning by adding 11.5% to its exports reading after a 25% decline last month. Besides dropping the trade balance significantly, the news has sent green waves throughout the world's markets. More than 2% on average in Europe, nearly 3% in Japan, and 1.5% throughout Asia. It's the first growth number for the world's second largest economy in 9 months, but policymakers intend to continue pushing through tough reforms. Friday's GDP number is expected to show a very low growth rate, but domestic demand is still growing. In Japan, the yen has been slipping thanks to rising oil prices and a deteriorating US dollar. Value picked up slightly as European markets opened this morning, but so far not enough to harm the outlook for Japanese corporate profits. And Australian consumer confidence came in at 95.1, that's 4% lower than March's reading. This is in contrast with the nation's business community, which is seeing a steady rise in sentiment measures. European equities had China to thank for this morning's lush opening. The Euro Stoxx is currently up 2.7%, the CAC 40 also 2.6%, and the German DAX by 2.3%. Even the Brits are joining the fun, with the FTSE up by 1.4%. With quarterly earnings expected to be poor over the next couple of weeks, however, investors are waiting to see if commodities and China are sufficient to maintain this trend. Meanwhile, the European Union is targeting cheap Chinese steel with anti-dumping actions, and ironically, the sector that lifted the FTSE this morning more than any other was the mining sector. Still, the zone's industrial production numbers yesterday show a monthly contraction following last month's 2% rise. At 0.8%, this is the largest retreat in 18 months. And amidst a report that British banks will be boosting private lending but not corporate, UL inflation was goaded into a 15-month record high, primarily by rising airfares during Easter and the rising cost of clothes. Reuters this morning reports that the heads of the Richmond and Kansas City Federal Bank branches were in a minority at the last FOMC meeting when they voted for a 0.25% rate hike. The debate is widening and there may be hope of a June hike yet. The nation's budget deficit came in yesterday evening at $108 billion. Both gold and oil took a slight breather this morning on profit-taking on yet another double mood swing on the upcoming oil ministers meeting this week in Qatar. Still up today, retail sales and PPIs from the US at 12:30 past noon, the Bank of Canada's monetary policy at 2, the EIA's crude oil report at 2:30, and a press conference with Bank of Canada officials. Come back again tomorrow for another market review just before our London session opening, and have a wonderful trading day.